The sell-off in Adani Group stocks over the past couple of sessions has now made analysts wary, who suggest more downside could be in the offing. The free fall in these stocks comes on the heels of a report by US activist investor Hindenburg Research LLC that said it was shorting them. It accused the firms owned by Asia's richest man, Gautam Adani, of brazen market manipulation and accounting fraud. Even if you ignore the findings of our investigation and take the financials of Adani Group at face value, its 7 key listed companies have 85% downside purely on a fundamental basis, owing to sky-high valuations. The Hindenburg Research LLC report said, in the last 2 trading sessions, most Adani Group stocks have lost considerable ground as compared to the frontline indices. On its part, Adani Group has clarified that Hindenburg Research has published this without making any attempt to contact them or verify the factual matrix. The developments, according to market analyst Ambarish Baliga, are now making markets nervous. He suggests more brokerages could now start questioning the firm regarding its financials.
These stocks have only moved one way. If you see overall, okay. If you see in the last 2-3 years, it's moved only one way, although they have been volatile in the recent past. So, with this correction, what you see or what we are seeing now, one can't say it is oversold. It can be oversold in a short term. And see, whatever questions have been asked now, see, no one was really questioning the group. Now, I don't know whether this will start that trend of other analysts also questioning. I don't think one should take a view that, okay, it has fallen because of which should buy. I think we have to see as to how they respond, because they started responding to the queries. The questions raised, they started responding. Yeah. But, I mean, the way they have threatened about legal action and all that, I don't think that has gone really down. It has gone down well with the market. There could be more downside for all you know. See, first of all, these guys are not here. If they were here, it could have gotten over much faster.
Assuaging investor concerns, CLSA and Jefferies have said that the group's debts are at manageable levels and the Indian banking sector is not at risk. According to those at Jefferies, Adani Group has diversified its borrowing mix and reduced the share of Indian banks, PSU and private in their borrowings from 86% in FY16 to 33% in FY22. The share of bonds as well as foreign banks in total debt has risen to 37% and 18% now. From banking sector's perspective, debt to this group forms 0.5% of total loans, 0.7% for PSU banks and 0.3% for private banks. Repayment timelines of debt have been conservatively planned. While we watch for developments here, we don't see material risk arising to the Indian banking sector, analysts at Jefferies said in a note. Interestingly, the 4 group stocks listed in the futures and options segment, Adani Enterprises, Adani Ports, ACC and Ambuja Cement, had already witnessed build-up of shorts in the beginning of the last week, that is, couple of days prior to the day the Hindenburg report news broke. In general, a fall in stock price accompanied with rise in open interest, or OI, indicates build-up of short positions in the F&O segment. Adani Enterprises, for instance, saw its open interest rising by as much as 71.3% in the first 3 sessions in the last week. Data suggests that a pullback, if any, may be capped around 3,350 rupees to 3,400 rupees range for the February series, while the support is seen in the range of 2,550 rupees to 2,600 rupees. Ambuja Cements too had slipped up to 7.7% in the first 3 trading sessions of the last week. The OI saw a significant jump of 385% during this period. Data suggests that the counter may bounce back above the 400 rupees mark in the near term, though the respite could be short-lived. This week, the markets will keenly eye the union budget proposals to be announced on February 1st and the outcome of the US Fed meet later this week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.